super excited that you're here. Now we have a lot of realtor business. Now we've grown the wealth team. Now we've built the concierge team. Now you've been able to put yourself on a budget. I'm sure that was fun. Now you've been able to grow your wealth in real estate. Now you've been able to turn around and have investment properties and have cost segregation and have write-offs. So now you're not paying taxes. At least I hope you are. If you read this book or you're at this stage, you're an implementer. If early in the book you ended reading the book, you would have never got here. So since you're here, you're a doer. And since you're a doer, you want to build it to where you're protecting your family through cash value life insurance. I repeat again, I am not an insurance salesman. I make 0 commissions on your life insurance policies, and I do not own a life insurance company. So I've got nothing to gain from this other than just giving you knowledge, giving you wisdom for you to be able to go protect your family. Life insurance to me was something I blew off for such a long time ago. I didn't think I needed it, so I kept on blowing it off. I thought it was something I needed before I died, okay? Very, very uneducated on the power of it. Lucky for me, my wealth advisor taught me how cash value life insurance can grow my wealth while I am alive, not just when I die. Term life insurance grows your family's wealth when you die, but cash value life insurance keeps growing tax-free while you're alive, plus it also takes care of your family. So the first policy I bought was in 2013, which is roughly around $5 million for my family, okay? So if I passed away, my family would walk away with $5 million. Now I'm insured for over $60 million. What does that tell you? Over 10 years, I've been able to grow the life insurance and the cash value in it to where now it's, what is that? Almost a little over 10x, going from 5 million to 60 million just in 10 years. Why did I do that? Simple. Because the cash value life insurance has generated over a $2 million cash infusement in the policies. What that means is now I have a minimum of $2 million that's fully protected, that's connected to our trust, and also that consistently grows tax-free, making 5 to 6 to 7% a year tax-free. And it's in the trust. So at the end of the day, if I die, or when I die, my family not only gets that 60 million, but also plus the additional 2 million. So as you're building this and as you're going through this, what did I use that 2 million for? I use that 2 million as a piggy bank for me to do what? For me to go buy investment properties, for me to be able to go buy apartment complexes. So every time that I went focused on growing my wealth by buying an apartment complex, and in year 4, I did the cash out portion of the burst strategy. When I got that cash back out, I put it back in my life insurance. It continued to make money. When I'd go buy another property, I pulled the cash back out. I went and bought an investment property. Year 4, put the money back in. All this is done under the umbrella of our family trust. The family trust is built to guard you from paying taxes, and also protection, and also helps you grow your wealth. There's multiple different strategies. I do not own a trust company. I don't own a will company. And if it's something that you want to learn more about, look up a professional to help you from there. So our family's assets and our life insurances are in the trust. They grow tax-free and they're protected. So I now, everything being in the trust, I own nothing. So you can sue me all you want. There's nothing there. Everything's in the trust, so I control everything, but I own nothing. And that took me a little bit of time in my ego to really understand that's the way wealth is really built. I can sit there and own everything, but when I die, then my family's got to pay this huge tax bill, or I can grow everything in the family trust, and when I die, it just goes generational wealth over and over. So the fourth thing I want to go over is something called a family will. So a family will is a roadmap of what happens when you die. Meaning, for example, when you die, or when I die, or my wife dies, there needs to be a roadmap what happens to the wealth, what happens to the money, who gets what, and how it's chosen, and how it's broken out. If all 4 of us die, my wife, my oldest son, my younger son, and myself, then the money goes in the family trust, which goes into a foundation. Then Kayla, my executive assistant, is been allocated to give away the whole family's wealth through donations. Now, those are specific causes that I've given him to be able to give those funds away, give that money away. But think of it this way. I've got everything planned. So what does that do? It brings down my anxiety. It brings down my fear. And it gives me more of my mind share, which allows me to be able to do what? Focus on growth, focus on wealth, play more golf, enjoy life. Understand for generations, the Illiberry family are going to be wealthy because I built this piggy bank for them that's protected through a trust. So as you've built this lifestyle for yourself and you've got your family now buttoned up, there's 5 words that I've learned to live by. And these words have definitely changed how I look at life. I've learned to live a fully lived life that I share. And then what I mean by sharing is what you're gonna have to see in the next chapter. In the next chapter, I'll see you then, but I'll show you why I share.